I think we're sort of be a bit more balanced between value and growth as we move into 2022. So if we look at the two favored regions we have are the US and Europe going into next year. In the US, we're sort of moving back overweight tech. So we do believe that this lower for longer yield environment, we're obviously seeing 10-year yields come down quite significantly, despite talk of tapering and rising inflation. So that we would say is probably going to be a reasonably supportive environment for tech, especially obviously if you get these fears of lockdowns coming through, that could again support that sector. So, in that space, we're still bullish. We do still like financials in Europe, so that's an area that we do like. But obviously, from an energy perspective, the recent decline in oil prices, although we do think oil prices will bottom out and move a bit higher, it's harder today to make that case for energy, which is obviously very important in the value space.
Okay, elsewhere you like US and European high yield bonds and Asian US dollar bonds. Let's talk about the Asian bonds. Specifically, what do you like? Are you looking at some of the corporate, looking at bonds in the corporate space as well? And you know probably where I'm going to go with this next question when it comes to the property space in Hong Kong.
Yeah, so I mean, if we look at the overall Asian case, obviously at the headline asset class level, it's still around 80% investment grade. So it's actually quite defensive in nature. And given, if you look at the pickup of Asian IG yields over US IG, for instance, and obviously over European IG as well, that yield pickup is very attractive. Given the the relatively strong credit quality, that looks pretty good. But to your point, actually, if anything, if you twist our arms and say we prefer Asian high yield over IG, and again, that's the yield pickup that we're seeing there is huge still. Obviously, we've seen some stabilization in spreads in recent times, but still that pickup is there. And in a yield-starved world, we believe that's a pretty attractive environment. Naturally, property sector is important to that, but we think that a lot of the bad news is already priced in there. And the authorities will want to stabilize, not put their foot on the accelerator, but maybe stabilize the situation a little bit through modest policy easing as we go through 2022.